Welcome to another ARIASWAVE market update. Okay, so have you been paying attention to what's been happening in the markets lately? Okay, well, not much has been happening. That's the truth. Okay, we're stuck at the top, we're stuck at the highs. We're seeing the tech stocks get decimated, but you know what? In the long term scheme of things, it doesn't seem to be much of a problem apart from Meta can't hire more staff. Unfortunately, that's terrible. Who would have thought they need any more anyway after their big mistake with changing their name to Meta in the first place? I reckon you could probably blame that more than the market for why that's going down. But there are a few stocks that haven't barely moved. Apple, Microsoft still holding the highs pretty well. But, we're looking at the Dow Jones here, and basically I just wanted to highlight a couple of things that, might make you reconsider if you think that this market's going down any further. I don't know if you're aware of the sun cycles, solar minimum, maximum, back and forth. These are pretty interesting predictors of highs and lows in the markets. They seem to be fairly accurate. Um, Now, these cycles go for about 11 years. So the last one we had was around December 2019. Okay. And usually it takes a few months or even longer to create the move that is for that time, for that cycle. And we did see the March 2020 move down, which happened to coincide with, that low in the sun cycle. And now we're on our way up. In terms of time, it'll probably be a few years before we get another top. So could be anywhere up to 5 years away, 5 6 years away. We just don't know. It's just typically what seems to happen. And after 11 years, we'll see another a low put in. At the highs, which I mean, I am expecting another downturn after 2030 or around 2030. So it would be around 2031 potentially. Um, so obviously, if you're going according to these cycles, regardless of anything else, we've already had our correction. So there's no reason to expect another one. The last time we had one was in 2008, which you can see obviously was a pretty good sign. And then before that was around 97. Not quite the high there. And then the previous one before that was around 1986. Obviously, about a year later, we had the 1987 crash. Before that, we had 75. It's pretty close to that low there in 74. So they're not always perfect. The average is about 11 years, but they can vary between, I think it's like 9 and 14 years or something. But it's like an average that they work it out to be roughly like 11 years. All right. So the one before that was, I mean, a few more back in time. You go to the Great Depression. That was also marked pretty well. And it's just interesting to see how this works. But it's not really something I use. I don't use you know the the stars and the what do you say? How do you call it? Astrology, right? I don't use that as a way to predict anything. It's just I'm just giving you something that is fairly reliable most of the time. It doesn't always work out to be perfect, right? But most of the time, they're fairly accurate type of cycles here. Um, Martin Armstrong has some interesting work that he's done with Socrates in relation to cycles, and that goes back even further than what I've shown you. So it's pretty interesting. His cycle uh, is in line. This is in line with his cycle, which is I think the final cycle in his Socrates set of cycles that occur. Um, so anyway, basically that's just what I wanted to cover on that particular thing. There's not much else to say there. I mean, The markets are stuck at this point in time. They're not moving very much at this interim. Um, like I said, we're still waiting for the euro to make another little low. It still hasn't happened yet. A bit of patience required. If you look at the small degree, you can see that it's hovering around that low. So, I mean, we just need a crack below the green line there. It's not much of a move that we do require. It could go a little bit lower. It's not going to make much difference at this point. It doesn't really change much in relation to what's happening now. One thing to note that's interesting is the 10-year yields are going down for a bit of a correction. Now, what kind of correction that is will be interesting to see. Personally, I just think it's just you know, you hit, you break the previous wave 4 high and you go down for a bit of a dip. You go down for a bit of a, you know, retest of a break of a descending trend line. I mean, there's no real reason to think that this is going to go much lower. I know that some people have been saying that if this goes much lower right now, that it will lead to a recession. But as I've just shown you in the previous chart, um, that's really not on the cards at this point. So um, to me, this is all hearsay, and you know, fair enough. There are some interesting things going on, like potential yield curve inversion happening. Twice in a row before a recession even starts. I mean, these things can happen. There are anomalies sometimes in markets, and when you're using macroeconomics, you've got so many different variables. It's just hard, because the environment changes so often that you're trying to use macro to figure things out. It's not quite um, easy to do, right? So obviously the waves are what I use, but I'm just making a point here. In terms of the long-term picture for oil, right? I haven't got any labels on this chart. Actually, I do. Give me 1 second, please. Okay. All right. So this is not what I think is going on at this stage. Just an idea I had at one point. To know what is really going on here, it really just takes a bit of a long-term view, in my opinion. I do believe that whatever happened here can only be a wave 1 and 2 that started off quite a while ago in terms of time. Um, I do believe that 2008 was a D wave top. This is not a 5 wave move. Okay. If you have a look in between here, I mean, the middle is choppier than wave 1 and 5. So wave 3 is never supposed to be the choppiest move. And obviously, I take off the log scale for this particular chart as it went back to 0. So this, in my opinion, there's only one thing this particular wave can be, and it's an E wave, right? It's a 1, 2, 3, 4, 5 pattern. Whatever happened back here would have been wave 1, okay? But you can't just go up for that long and come back down to 0, right? And not count it as a wave 2, okay? You just can't do that because, you know, wave 2 can never go below the start of wave 1. Okay, I know that it went into minus territory, but there's more chances that it is a 2 or a B rather than anything else. So to me, this is the start of either, more than likely, it's the start of uh, a larger move to the upside. Okay, um, inflation is picking up. Inflation will probably rise to levels never seen before. I don't doubt it. Just check out the money supply. The inflation of the money supply is the cause of long-term inflation. It's probably just going to be normal. I mean, obviously things cost more, started to cost more over the last 50 years than they did in the previous 50 years before that. And then in the next 50 years, it's going to be even more than that. I mean, it's just normal, right? It happens all the time. It's been happening for a long time. And this is why people hedge against inflation using, you know, assets, precious metals, and various other, ways of protecting your wealth. So, I mean, to me, there's no other option for this. If you want to trade this, um, in my opinion, you'd be looking for a continuation of the trend. So, if I do see something of a setup happening here sometime soon, I may put out an idea as to indicate as such. But I would say a trend continuation is brewing. We're just having a bit of consolidation at the highs there due to obviously such a big move since 2020, right? Okay, so moving on, just to cap this off, I mean, I know I've been going up over a few charts talking about different things, but I mean, to me, going back to cryptos, XLM, log scale back on, to me, this is a moment in time where we start off fresh. Okay, we're starting off fresh in a fresh move to the upside. Okay, yes, we've had our correction since May 2021. We need to start getting ready for upside. Okay, does this look like a very strong move to the downside? Okay, now if you believe that this is the start of a move to the downside, then obviously you're bearish and you should stay away from any of my ideas because my ideas are long term bullish. Okay. Um, in terms of fundamentals, yes, central banks are looking at CBDCs, and XLM happens to be a utility token, crypto token, whatever you want to call it. Same as XRP, but XLM has a clearer pattern, in my opinion. And this particular pattern is the only logical conclusion as to what this could be long term. Anything that sort of topped out around 2018, anything that kind of bottomed in 2020, to me, I'm looking at it as a DE pattern. Okay, a DE pattern, something that is the beginning of a new trend to the upside most of the time. Okay, there are some coins which I've seen behave in ways that I can't work them out, but then again, they haven't got much data that goes before 2020. Okay, so nobody knows where a lot of these coins will end up. They'll probably go to zero, or they'll probably flail or hang around the lows for probably a lot longer, or they'll just start a new trend when the main trend starts, but they may start from a lower level compared to what you've seen them at previously. Okay, so that's my approach to the analysis here. Um, Using the Dow Jones as like a rough guide, the euro as a rough guide. I am looking for reversals to take place soon, but to me, it's just you're either a bear or a bull. Okay, and if you go back throughout history, most of the time the market tends to trend to the upside. Okay, since the Great Depression, markets recover a lot faster. Um, they do recover a lot faster than what they used to. Um, More intervention, more stimulus, more money printing. I mean, it all plays a key role. I do believe we are in the midst of, you know, in basically in the beginning portions of a really huge rally to the upside long term, right? Massive rally started hundreds of years ago and will continue for hundreds of years more, right? We probably will see a crash around 2030 or before then. But until that point in time, what's the point of worrying, right? We've still got so long to go on that. So, really, what's the hassle? There is none. Okay. So, if you think that utility coins are going to be a good idea, then load up on them. They're pretty cheap. 10 cents. I'm not a financial advisor, but they're pretty cheap. 10 cents US, 11 cents US. If this goes down 10 cents, 9 cents US, whatever it is, right? It's pretty cheap. Just buy a couple, keep them in the sock drawer somewhere where you can't see them, right? And then in the future, who knows? Maybe one day you'll need to look for them. And it's just that type of thinking. To me, it's good enough. Because you just never know. Cryptos is the volatility in cryptos is it's unlike anything we've ever seen on a chart before. So, in terms of the price action, I still believe we have a B, C, D, E pattern unfolding. This thing's still producing the correct patterns as per my analysis indicates, and nothing has changed my view. For it to be taking this long to produce a wave 5, to me, proves that it's a wave 5. Okay, as I mentioned in my last video, the slope starts to get more on an angle, which means there's less power in this move down compared to wave 3. You can see there's a change in the angle, right? And that's even if you want to use an angle, you can. This one's 71 degrees, and this one is at the moment, which is still going, but it's 40 degrees. I mean, there's a big difference there. It's not just chop liver. It's obviously a marked difference, and you can tell that this one is getting, the move to the downside is losing strength. It's a small DE pattern, okay, but these are the waves that you don't know what they mean at the lows sometimes, right? These are the kinds of bottoms that form at lows that you try to figure out, what is this pattern? I don't know what it is. Elliott wave doesn't tell me. Well, Arias wave does, and that's the whole point. That's the whole point of me bringing these updates every now and then periodically, is to highlight these types of things. Yes, they're weird patterns. It's because they're not just straightforward 5-wave moves. They are, they do contain the components of a 5-wave move, but they look like a strange 5-wave move, right? And that's because when you get to the ends of corrections, you get distortions. You get D's and E's that really just look like weird bases, right? For the next move that's coming. So this is just the logic behind some D and E patterns, right? I've seen some very strange ones, and they usually happen at turns. Okay, so in terms of anything else that's going on, um, you know, there's nothing else to say for now. We need to see a break above 15, but first we need to see a break below the 10-cent area, the low here from 19th of June, roughly. Uh, Basically, that magenta line, and then we need to see a bounce back up above 15 cents to confirm that this correction is done. And if it's done here, you probably can assume that it's done on Bitcoin. I'll probably put out another video on Bitcoin focusing solely on cryptos soon. I just thought I'd do another market update that sort of encompasses the general long-term idea for all these markets. Hopefully you found this video interesting and informative. Thank you for watching.